Hello and welcome to Managerial Accounting here at Stevenson University. I am your professor, Dr. Brandon Schweitzer. Happy to have all of you with us today as we explore the introduction to managerial accounting. And before we jump into today's lecture, I just want to quickly call your attention to the classroom and explain where we are. So if you are on the homepage of the classroom, coming down the classroom, you're going to see a couple of very important pieces of information here. We have the MyLab Mastering Pearson e-textbook. Uh, we have the course home there. And then in week one, which is where we are today, under instruction materials, and you'll see that we are going to explore managerial accounting concepts here. And you'll find the PowerPoint presentation, which we're about to cover. You'll also find the week one assignment that goes along with what we're about to learn, which is managerial accounting concepts. So please identify where that is in the classroom and make sure that you complete your homework assignment by Sunday night. By Sunday night. No late work is accepted in this class, so it's very important that you complete that Pearson Week 1 assignment by Sunday night. Again, no late work is accepted in this class, so please make sure that that's completed on time. Use the PowerPoint presentation to help you, and also use this lecture to help you in completing that assignment. So, without further ado, let's jump into what is managerial accounting. So let's talk about this. So we're going to go through a couple of key things here. So first, we're going to talk about management's responsibilities when it comes to managerial accounting. We'll talk about the differences between financial accounting, which is the course that you took before this one, and we'll talk about this course, which is managerial accounting. We will talk about the different roles and skills required for management accountants within various organizations. We'll talk about the Institute of Management Accountants and apply ethical standards. I am a member of the IMA, so if you ever have questions about IMA, please feel free to reach out to me. I'll be happy to talk to you about that. We'll also talk about business trends and regulations that affect managerial accounting. And we will also look at the concepts of data analytics, and we'll also look at management accounting from an Excel perspective. So, first and foremost, what is managerial accounting? So, managerial accounting involves a couple of key people, right? So, we need to make sure our decision makers in our business are involved in the process. So, we look at who's involved here. So, it involves the decision makers in the business, it involves planning and performance of management systems, and it involves the expertise of financial reporting and control. So, in business, we use our income statement, balance sheet, statement of cash flows, and statement of retained earnings to make decisions. These financial statements that you learned about back in financial accounting help us to steer the business, to help us to make decisions about the business. They help us to do things like plan, direct, and control, overall to make decisions about the business. And so management accounting involves all of these things. Managerial accounting helps managers to fulfill their three primary responsibilities of planning, directing, and controlling. It's integrated throughout these responsibilities. It is the decision-making process. So I want you to think about this for a second. Think about how we plan for things. Well, when we talk about planning, we're setting goals, right? We're thinking about the overall direction here. So we're setting goals and objectives. Okay, that's what we do in planning. What do I want to achieve here? I want to achieve a 10% increase in sales. I want to achieve a higher net income. I want to achieve a higher asset balance in my cash or in my accounts receivable. I want a lower balance in my accounts payable, or in my long-term accounts, I want a lower balance. These are all plans. These are all objectives. So that's a part of the planning part of the decision-making process. So think about that for a second. The idea here is that we're setting goals and objectives, and we're planning on how to achieve those goals and objectives. The other management responsibility, of course, is directing. The directing comes from guiding the business and the day-to-day operations. We direct the company. We're guiding the company. That's what directing means. And there's a lot of decision making that goes on in directing. Think about how we decide which direction the business is going in. And how do we get there? It's based off the plan. We know that. We have goals and objectives. It helps to guide the direction of the company, right, through the day-to-day operations. And the third primary responsibility of management, of course, is controlling. We need to evaluate the results and make decisions based off the results. We're controlling the process. And so once we've gone through the three primary responsibilities, we go back to the feedback component. The feedback tells us how well we did in these three areas, right? And it helps us to guide the decision-making process. So all of these things work in combination. So as I had mentioned, the planning responsibility, we're setting goals and objectives and how to achieve them. The directing, we're guiding the company, we're overseeing day-to-day operations, and controlling, we're evaluating the results, right? Management is continuously making decisions while we plan, direct, and control the operations of the business. So let's talk about the differences between managerial accounting and financial accounting. Now, this course, of course, is named Managerial Accounting. So we're going to be focused a lot on the managerial accounting side of this chart. On the right side, we see financial accounting. Financial accounting is the course that you took before you took this course, right? And then the issues are what guides each part of financial and managerial accounting. So let's walk through this together. So when it comes to managerial accounting, we look at the internal users of data. Financial accounting has to do with external users. Managerial accounting has internal users. So, for example, an internal user is an employee of the business, someone who works inside the company. That could be management, that could be the board of directors, that could be the individual line managers, it could be the vice president, president, whoever's making decisions for the company, inside the company. That's what managerial accounting. Those are the people that make decisions. They're inside the company. On the financial accounting side, they're external users. Now, the course you took before this one, you looked at the external users like creditors, stockholders, government regulators, etc. People outside the company. Wanted to look at things like the income statement, balance sheet, statement of cash flows, and statement of retained earnings. Those people outside the company looked at those financial statements to make decisions about the company, right? So that's one of the primary differences between managerial and financial accounting. Managerial accounting helps managers to plan, direct, control the operations of the business. Helps them make decisions, right? On the financial accounting side, external users like creditors, stockholders, and government regulators are making decisions about the company. So it goes back to that idea of internal management accounting, external financial accounting. Uh, on the managerial accounting side, internal accounting reports are deemed worthwhile by management. What we mean by that is that in managerial accounting, we generate other types of reports. Like, for example, the cost of production report, the cost of goods sold report, the budget for the company. These are all internal reports that help management to make decisions. Right? That's managerial accounting. On the financial side, in financial accounting, it's mostly based off of generally accepted accounting principles. It was financial statements and the generation of those financial statements, which include the income statement, balance sheet, statement of cash flows, statement of retained earnings. Right? That was what we learned about in financial accounting. On the managerial accounting side, we're focused on those internal reports. Another difference. When it comes to managerial accounting, management determines the format of those reports. It doesn't have to adhere to generally accepted accounting principles on the managerial side. Why? Because those reports are not published. They're not made public. Managerial reports are private. They stay in the company. They're not reported. Therefore, when it comes to managerial accounting, we don't have to follow generally accepted accounting principles when it comes to the format and the standards. Like, think about that for a second. Think about the budget. There's no company in this world that publishes their budget. Okay, that's not something you want made public, right? So that's why you never see the budget of a company like Coca-Cola or Starbucks or whoever. It's not public, right? The budgets are not public. Those are managerial reports. On the financial accounting side of things, yeah, those financial statements, the income statement, balance sheet, statement of cash flow, statement of retained earnings, they're all published. They follow the generally accepted accounting principles. They're made public. Because remember, financial accounting, external users. Managerial accounting, internal users. When it comes to managerial accounting, some information is based on past transactions. Managerial accounting focuses on the future, right? It helps to guide us, the planning process, the execution, the control, right? Forward looking. Provides information on both external and internal transactions that affect the company. Right? That's the managerial accounting side. On the financial accounting side, information is based off of historical transactions with external parties. So the biggest takeaway here is that on the managerial accounting, we focus on the inside the company, the people inside the company. They make the decisions for the company. We look at internal reports, internal employees, internal, managerial, right? That's what managerial accounting is all about. The course you took before this one, which was financial accounting, in that course, you talked about how to prepare the income statement, balance sheet, statement of cash flow, statement of retained earnings. Talked about the preparation of those things. And it was used for external stakeholders, people outside the company. So that's one of the biggest takeaways of the differences between the two. Diving a little bit deeper on this topic, On the managerial accounting side, the information's got to be relevant. It's got to help the decision makers to make decisions. On the financial accounting side, the information needs to be reliable and objective because, again, it's going to be published, it's going to be audited. From the managerial accounting side, we look at segments of the business like products, customers, geographical regions, departments, divisions, in order to make decisions about the company. An example of that, I want you to think about this company called Peloton. They make quote unquote smart exercise equipment, right? And they make a couple of different parts of exercise equipment. They have treadmills, the bicycles, uh, and the rowing machine, etc. And Peloton needs to make a decision because one of those three products is not successful. It's not helping the company to generate revenue. In fact, it's generating a loss. So, what do we do here? As a manager inside that company, they need to think about that segment of the business. Do we eliminate the segment and keep operating? Do we try to revive the product? Do we look at customer demographic information, etc.? Okay, so think about that from a managerial perspective, as opposed to the financial accounting side, where we looked at the company as a whole through the income statement, balance sheet, statement of cash flow, statement of retained earnings. Real simple. On the managerial accounting side, we look at management's needs. Some reports are prepared daily or as needed. Whereas on the financial accounting side, we follow generally accepted accounting principles and publish reports quarterly and annually. On the managerial accounting side, there's no audits involved. We only look internally. So there might be an internal audit by an internal auditor who works for the company, but nothing external. When it comes to financial accounting, all publicly traded companies are required to be independently audited by a CPA or a CPA firm in order to ensure that the reports are fair and accurate. Continuing with the theme, on the managerial accounting side, there's no authoritative body that they have to answer to here. Management accounting reports don't require SEC authorization. They don't require to follow GAAP requirements, right? It's managerial. It's internal. No one's going to see this, right? Except for people who work for the company. On the financial accounting side, yeah, there's a lot of regulation. You got the Securities Exchange Commission. It has to follow generally accepted accounting principles. It might have to follow the FASB, or IFRS if it's international. All of those bodies govern. Right? On the managerial side, we look at everything from an internal perspective. Okay, so management considers the behavioral implications when designing an accounting system. On the financial side, we're more worried about disclosure and that type of thing. So these are the primary differences between managerial and financial accounting. So think about the type of management accountants, what they might have to do on a regular basis. So many people have an outdated view of what accountants actually do. People think that an accountant is just, they just count stuff, right? Or they just kind of make sure that the reports are accurate, right? That's kind of outdated way of thinking. Businesses have gotten a lot more complex over the years, especially as new technologies have evolved, like artificial intelligence, for example. So accountants have more responsibilities. They've grown, and they require like more critical thinking skills, insight, and judgment. Management accountants are referred to often as business advisors or analysts or financial professionals. So that's the real way of looking at what management accountants are today. So what kind of skills do you need to be a management accountant? Well, there's technical and non-technical skills that are needed, right? On the technical side of things, there's a lot. Planning, budgeting, forecasting, internal financial reporting, performance management, cost management, internal controls, technology and data analytics, decision analysis, financial statement analysis, etc. Right? These are all the technical accounting things that a good management accountant needs to know. Then we have the non-technical side. We've got ethics, communication, customer service, adaptability. The accountants have to be able to talk to people, right? It in prior years, an accountant would just be in their office, never had to interact with a customer, never had to interact with the board of directors. They just kind of did their thing. But those days have changed a lot. And in today's environment, you'll have an accountant sitting at the board meeting. You'll have them talking to customers. They'll be talking to, pretty much anyone. They have to be adaptable. They have to be identified as a leader in the business. They have to understand the business language. They're professional people. They know how to deal with conflict. And most importantly, they know how to present data. This leads me to a story. Years ago, was consulting with a small dentist operation in Baltimore. And this dentist, she was really good at what she did, right? Amazing dentist. She was one of the best dentists there was. Okay. Really, really good at her trade. And she asked me for help. And she says, I need your help looking at my accounting because I need to make some decisions, but I'm just not too sure what I'm looking at. Again, great dentist, terrible manager. She just didn't know the language of the business, right? So I had to teach her a couple things, how to read her income statement, balance sheet, statement of cash flow. She didn't really know what she was looking at. I said, well, listen, let me put this to you in a visual way. So I created all these real nice looking charts and graphs, made it look very easy to understand. Nice pie charts, some line graphs, made it real simple. And I showed her that way. And then she understood what she was looking at. Right. So it's technical and non-technical. But presenting, it's a non-technical thing. You have to be able to teach somebody what it is that they're looking at. Because not everyone speaks the language of accounting. If you go and talk to somebody about an income statement, they're not going to know what you're saying, right? Unless they took an accounting class. But a lot of them haven't. Especially small business owners. You'd be surprised. A lot of them that have never taken a business class before. So they're not going to know exactly what it is that they're looking at. But you do, or you will, and you'll be able to teach them something. So think about those types of skills. Even if you're not going into, you might not be in this class to become an accountant. I know that. It's okay. A lot of you have different backgrounds. You're getting, some of you are getting your degree in business management, or maybe sports management, or maybe fashion, or maybe one of the sciences. right? And you're taking this class because it's a part of your degree program. Great, no problem. But I think it's really important that you understand these concepts and you're able to teach other people what it is that you know in a meaningful way. And oftentimes that might be putting their financial statements into graphs and charts so you can visualize the trends with people that you're trying to help. So just something to think about. Management accounting affects every single segment, every single business, every single area in every single business, right? Every business has accounting. Even if it's just a local hot dog vendor on the corner to the large Fortune 500, they all have accounting. Everyone does. Okay, every business has accounting. So, and every business has someone working in the accounting side of things. It could be the owner of the company all the way up to the accountant, right? But someone's working on it. And so that's why it's important for you to know these things. Entrepreneurs need to know how to make financial decisions. I gave you the example of the dentist that I worked with. Business managers need to consider financial ramifications of any business decisions that they make. You know, they have to know what the impact is on their business. Marketing and sales strategies, assumptions, and predictions will be the driving force behind all company budgets. Making the sales, every budget starts with sales in mind. How many sales do I expect to make? And that will help me drive my budget. For non-business majors like nursing, engineering, musicians, fashion design, and all the companies that you'll ever work for will use all the cost and revenue information to guide their plans, actions, and decisions. So just think about that and keep it in the back of your mind that every business has accounting, and the managerial accounting side of things will impact your position in that business. This is a typical organizational structure. Now, the way it usually works is that the board of directors guides the companies. They guide the decisions. Yeah. They're usually the one responsible for hiring the CEO. And the CEO runs the business, the day-to-day operations of the business. And within the CEO's C-suite, if you will, there might be a chief operating officer and a chief financial officer. Below the chief operating officer, there's going to be the VPs and the various operating departments. And then under the CFO, you might have a treasurer or a controller. And outside of that structure, you're going to have an audit, internal auditor. An internal auditor, they look at every aspect of business to make sure that everything is operating as it should. And they report directly to the audit committee, and the audit committee reports to the board of directors. It's just kind of a checks and balances system, right? So this is a very typical organizational structure. I'd mentioned earlier that I'm a member of the Institute of Management Accountants. In fact, I'm the vice president of academic outreach for the nation's capital chapter. That's the area that represents us here at Stevenson. And I also have worked on the national board of IMA as well. I've been working with IMA for the past 6 years now, and it's a lot of fun. I enjoy it. It is a professional association of management accountants, is what it stands for, here throughout the United States. And it's actually an international organization represented across the world, really. And the idea is that we bring together resources for developing, certifying, connecting, and supporting accountants. We really bring together the experts in the field. And there's a couple of certifications that IMA offers now. The most recognized one is called the CMA. It's the Certified Management Accountant. And once you are almost done with your bachelor's degree in business, you can sit for the CMA exam if you want to. And the CMA exam is a rigorous two-part exam. It requires a few years of work experience, and you need once you pass the exam, you need to keep doing professional education. You'll need to earn your bachelor's degree. And it's also important to know that an individual that does have a CMA, they typically earn double the amount of non-CMA peers that work in accounting, right? So the CMA exam, in my opinion, is a great alternative to the CPA. So if you are an accounting major, I would guide you more toward the CMA rather than the CPA, just because, in my opinion, the CMA is a little easier to get. But it's still very rigorous. And the nice thing is with this, you can sit for it while you're still working toward your bachelor's degree. So something to think about. The IMA is one of the governing bodies that had helped to establish ethical and professional practice within accounting. So management accountants continuously face ethical challenges, as you know. To help guide management accountants, IMA has developed the principles and standards. This exhibit here, this chart, helps you to summarize the IMA Statement of Ethical and Professional Practices, which are also found within your textbook. And so it contains the full IMA statement on ethics. The idea here is that we maintain professional competency, preserve confidentiality, uphold integrity, perform duties with credibility, so forth and so on. The ethical standards are maintain professional competence, preserve confidentiality, uphold integrity, perform the duties with credibility. So we do all these four things together in order to maintain the ethical standards of accounting. Ethics is at the forefront of pretty much everything we do in accounting. We want to make sure that we're behaving ethically. We are doing everything legally, ethically, and responsibly, right? And so there's a couple of steps to resolving ethical dilemmas that might occur. So, of course, follow your company's policies. If there's an issue that remains unresolved, have a supervisor mediate. If it needs to be escalated, escalate it. And then consult with an attorney if needed. So something could be ethical, but not legal. Something can be ethical, but not legal. Or something can be unethical, but legal, right? They both have their challenges. So not all ethical behavior is illegal, and not all illegal behavior is unethical. IMA helps to make sure that the lines are established. Yeah. By creating honesty, fairness, objectivity, and responsibility. So just follow the guidelines and you'll always do the right thing. So that's IMA. Now I want to talk about and shift gears just a little bit with respect to data analytics and critical thinking. I think, in my opinion, this is like the most important thing that any business student needs to know. Okay, super critical. The reason why I say that is because, especially now with the integration of artificial intelligence and pretty much everything that we do on a day-to-day basis, it only gets more complex, right? So being able to analyze large pieces of data and information with some ease is awesome. So I think that for you as a business student taking this course with any kind of major, I think it's so important that you understand how to analyze data in a meaningful way. And of course, to think critically. Thinking critically is what sets you apart from everyone else. Okay. So, a couple of things we need to know. The collection of data from sensors, social media, GPS, text messages, pictures, customer reward cards, and any other piece of data, like a Metro card, for example, is increasing at an unprecedented rate. The data collection is increasing at an unprecedented rate. We call this unstructured data because it's fragmented, right? And it's coupled with traditional business transaction data. And what this is doing is it's changing the way that companies operate over time. Right? Unstructured data has changed the way businesses operate. Just think about that for a second. Think about your data. Okay, you as an individual, you have a lot of data. You're full of data. Okay, very valuable data. You have likes, you have dislikes, you have a personality, you have a face, you have fingerprints, you have eyes, right? The retina scans. You have a lot of data, okay, both physical and non-physical data. Companies want your data because they want to be able to market their products to you, right? So think about that. That's unstructured data that you have that companies want so they can market their products to you. In accounting, these companies commonly use enterprise resource planning systems like Oracle or SAP. Okay, these are pieces of software that manage the company's finance, human resources, operations, etc. Right? It's an integrated system that helps them manage the business overall. So, with that software, they use and collect data to make decisions and to market products to you. Data cannot stand alone on its own. It requires critical thinking. We need to be able to draw conclusions from the data. We need to be able to draw trends from the data. Improving quality of thought by skillfully analyzing, assessing, and reconstructing data is so critical. When you're able to do these things, you're able to demonstrate your ability to think critically and your ability to make decisions. So think about that for a second. The world as we know it is becoming very globalized. What we mean by that is that transactions are conducted across borders very easily. Very easily. I can purchase a plane ticket on an airline that's based in Europe or in South America pretty easily. Okay. I can purchase goods and services around the world pretty easily, and they'll arrive at my doorstep. Think about that. That's globalization at its finest. U.S. economy is becoming a knowledge economy over time because of the amount of data we have, in which people are more employed for their intellectual capacity and their ability to provide manual labor. Globalization has, of course, a lot of impacts other than what I had identified, like being able to purchase something from anywhere on the planet. There's more competition because there's an increased globalization. Uh, and companies need to be aware of the regulations and laws from other countries if they want to be able to do business globally. The European Union has a lot different set of rules and regulations for accounting and business operations than we have here in the United States. And companies can learn new management techniques by observing their international competitors. So as we know, we the more data we collect, the more competitive we are. So in business, it's so important to be sustainable, not just from a environmental perspective, but also from an economic perspective and a social one. We call this environmental social governance, which we'll talk a little bit about in this course. I actually just got back from South America, from Colombia, and I did a study with the Fulbright with a Fulbright scholarship, and my study was on environmental social governance, and we talked a lot about this concept called sustainability. And sustainability is the ability to meet the needs of the present without compromising the ability of future generations to meet their own needs. So think about that for a second. The business needs to sustain itself in the future. It needs to be stable. It needs to be socially conscious, environmentally conscious, and of course, it still needs to generate a profit. We call this the triple bottom line. It recognizes that the company's performance should be viewed in terms of people, planet, and profit. Right? So this is the concept of business sustainability. Now, in accounting, a lot of things have happened throughout the past. One of those things resulted in this creation of the Sarbanes-Oxley Act of 2002. There were a couple of companies like Enron and WorldCom that committed fraudulent activities. They defrauded their investors, right? A couple of things they did. They overstated their sales, right? They said they made more sales than they actually made. Now, you might think to yourself, well, why would that be a bad thing? The reason why it's bad is because if you said you sold more than you actually did, it makes the company look more profitable than it actually is. And investors like profit, so they investment to a company that falsely made sales, that's not a good thing, right? That's defrauding an investor. Can't lie to people. So the purpose of this act through Congress was to restore trust in publicly traded companies, management, and financial statements and their auditors. That was the whole idea behind this. It made things more transparent, trustworthy, etc., right? More ethics. It enhanced things like the internal control process, financial reporting, and the overall regulations. So that was the Sarbanes-Oxley Act of 2002. A couple of key features about that Sarbanes-Oxley Act. It requires the company's CEO and CFO to assume the responsibility for financial statements and their disclosures. The CEO and CFO must certify that the financial statements and disclosures are fair, material, and that the operations and financial condition of the company are true and accurate. Additionally, they accept responsibility for establishing and maintaining adequate internal control processes and structure for their financial reporting. The companies must have internal controls and financial reporting procedures assessed on an annual basis. So in other words, it has to be audited. So it includes these 4 features that you see in front of you and what I had just mentioned. So going back to data analytics, as I'd mentioned, it's so important, right? It's really important that you know how to do this. So managerial accounting has been centered on collecting, summarizing, and analyzing data in order to make good business decisions. What started with a pencil and paper with calculations about 100 years ago has evolved to utilizing technology. which leads us into today's digital revolution through artificial intelligence. We're seeing so much data come through, large quantities of data. And now it's very easy to collect, store, and analyze data. Regardless of the data or tools that are used, the heart of the data analytics will always be the center on turning raw data into actionable insights. In other words, the process of data analytics is to gain insights from data that management can act upon in order to advance the strategy and mission of the organization. So here we see some benefits of that data. Good decision-making process. We make faster decisions, increased efficiencies, tailored to specific market efforts, and drive company innovation. So just a few benefits of data analytics. So there's a process, of course. Students preparing to enter the business world need to know how to frame and solve business problems using data analytics. That's really what it boils down to, okay? Since data analytics is all about using data to inform decision making, the process generally starts with business issue or question. Question always guides the rest of the process. So think about the business question. What are we trying to solve here? So here we see the process, right? First, we identify what is the issue. What is it that we're trying to solve? Why are we in business? What are we trying to fix? What type of data do I need to collect? Is it data from my customers, from my organization itself, etc.? What type of tools or technology do I need to use in order to collect that data? Am I going to use artificial intelligence, or am I going to use other database softwares like Power BI or Tableau? Am I going to use Excel? Am I going to use ChatGPT? Am I going to use Microsoft Copilot? Am I going to use etc.? Right? The list goes on. And how am I going to use it? How am I going to obtain and clean the data and make sure that it's well analyzed? Right? So through analysis and insights. And then once I've done all these things, I need to figure out how am I going to communicate this data? How am I going to show it? Well, of course, me, I'm going to simplify it, visualize it, right? Through some nice fancy pie charts and line graphs, etc. And I'm going to use a plan to implement and monitor the results in this process. So this is the data analytics process that we normally follow. So a lot of different types of data. We already talked about one called unstructured data, but there's also structured data. Structured data, if we look at high organized and predefined discrete categories, like an Excel spreadsheet. They oftentimes contain labels, and it's easily searchable and easy to manipulate. That's structured data. So a lot of data that you would see on like an Excel spreadsheet, that's structured, right? It's got the headers, it's got the amounts, it's got, it has the X and Y axis, everything's clearly labeled, etc. That's structured data. Unstructured data are the things we talked about earlier, like social media posts, digital photos, sensory data, satellite images, weather patterns, the retinal scans, fingerprints, etc. Right? It's all unstructured data. Surveys, that's a good one. Then we have semi-structured data. This is the stuff in between both structured and unstructured. Right? In general, data can be defined as a collection of observations. While not technically an asset of the company on the balance sheet, it is defined by generally accepted accounting principles. Most companies consider something of value, right? The data itself, especially if that data can be sold or marketed to other organizations or used internally to improve company's profitability, right? It is an asset. Well, of course, we would probably consider this to be a intangible asset on the balance sheet. Data can also be categorical or nominal. This, of course, represents things that have no numerical value, like a customer name, state, distribution channel. Think about how you organize the data. We have ordinal data, which clearly identifies an order, like rankings. And of course, we have quantitative data, which can be measured, counted, and aggregate. Things like sales revenue, number of customers, the cost of different products, etc. So now we know what the different types of data are. There's a lot of different types of data analytics. Different types of analytics are used to address different needs of the business. So first we have the descriptive analytics, which describes what happened or is happening. We got diagnostic analytics that uncovers the root cause of a certain condition. We have predictive analytics, predicts what's going to happen next or in the future. We have prescriptive analytics, which determines what should be done. And we also have adaptive and autonomous analytics, which is the collection and analyzation of data, learn and adjust without human intervention. And that's where artificial intelligence lives. Once I understand how to analyze my data through my data analytics, I can visualize the data. What does it look like? Right? Visualization is a common part of data analytics as it provides a visual format for summarizing vast quantities and varieties of information so that people can analyze, interpret, and observe patterns and relationships and make inferences based on that data. Visualizations range from things like charts, line graphs, scatter plots, and more complex, unique presentations. Right? So there's so many different ways to look at this data. The point of visualizations is not to dazzle the reader with fanciness and being complex, colorful displays, but to faithfully represent the data in a meaningful way, right? So they can draw conclusions. So we talked about things like data analytics and data visualization. On the analytics side, Excel is oftentimes a huge part of this, right? So here we have a blank Excel workbook. So you open up Excel and just take a look around, start looking around, right? So the highlighted fields you see here are the current tab, insert function field, formula bar, name of the workbook, the ribbon with different tabs, commands, and icons, name box, and cell references. So in looking at these different fields and areas within Excel, I want you to think about how Excel works overall, right? This is one of the most powerful business tools on the planet. So I really want you throughout this course to really explore Excel and try to get a good understanding of how it all works. At the bottom of an Excel workbook, you oftentimes will see additional tabs within a workbook. We call those worksheets. Worksheets are the different tabs. The workbook is the Excel file. To select whole columns of data, we place the cursor on top of the cell of the column and hold Control Shift, or just hold down your mouse pointer and drag down. Okay. To select a whole row of data, place the cursor on the first column and then click on Control plus Shift and the right arrow key, and you'll be able to do that. To select a whole set of data, place the cursor on any cell within the data set and hold Control plus A. It's important to format your cells appropriately because this is how the data is going to be displayed. For example, we see the dollar, which formats the cell in a dollar amount, a percentage, which turns the number into a percentage, and a comma, which turns the number into percentage. Dot zero zero dot zero zero zero, etc. Here in Excel, we see other various commands, right? So get used to this, especially as we're looking at larger data sets, because these types of things will really help you to navigate through those large data sets. We also do a lot of relative cell referencing. Excel follows the order of operations, which hopefully you've learned about very early on. And these operations are found within all mathematics, right? When it comes to relative cells, these are cells that are relative references. If you can copy and paste the formula into another cell, Excel will shift the cell reference to the right or left, depending on the direction, and up and down within the worksheet. But you can lock those cells in place by adding in the dollar signs in between, in front of the letter and in front of the number of the cell. Call this absolute cell referencing. So when you copy and paste, it'll automatically reference back to that original cell. So the copy paste rule within Excel can be somewhat tricky, so just be very careful as you're using it. And then there's a couple of shortcuts on the ribbon. And here's some more ribbon data within Excel. You can input other formulas. And also now there's if you select that data part of Excel, there's a lot of really cool stuff that you can insert there, especially like stock prices, that type of stuff. And of course, the Excel functions. So definitely get yourself familiar with Excel. Each function has a unique dialog box that appears. The function is accessed through either the function library or function button. So there's a lot of different functions in Excel. These will all help you to become experts in Excel. Now, you don't have to become an expert in Excel in this course, but I do want you to become very familiar on how it works. Okay. So that, my friends, is the end of our discussion today on the introduction to managerial accounting. Again, your assignment for this week is here in Blackboard. So come back to Blackboard, go to week 1, and select that week 1 assignment, and go ahead and start working on that assignment. If you have any questions, comments, or concerns, please feel free to reach out to me. You have my phone number, my email. You can message me through Blackboard, whatever it is. We'll get back to you as soon as I possibly can, and I will make sure that you get through your challenge, and I'll work with you together. Thank you so much for your time today. I sincerely appreciate all of you, and I wish you all the best. Thank you so much. Take care. Bye-bye.